day traders, welcome to Charts and Coffee. Hope everyone's doing great. I think I've got all the rooms ready to go. I do believe so. All right. So happy Tuesday, everybody. Happy end of quarter week Tuesday. We're going to continue to seek the same kind of shenanigans that we've been seeing. Well, yesterday was rife with them. Lots of chop, lots of unpredictability. And really, all of that ultimately leads to a lack of follow through. And by the way, gang, fills are great. Fills are how we start the game, but follow through, right? Follow through is the key. Anyone watching the football games last night? What's the team that wins? The team that has the follow through. And anytime we're dealing with chop, gang, it's the follow through that's going to be, obstructed, right? We're not going to get the continuation day after day or hour after hour. So we shorten our time frame. And that's why, I'm going to continue to emphasize the day trading until we get those trends back. And do I expect them to come back? Yes, I absolutely do. If you caught the top tier outlook on Sunday night, you saw that in terms of strength right now, we have actually a lot of clarity in crude oil and oil stocks. That's probably the best place at the moment to look. And so if you take a look at CL, let's go jump on over to crude oil futures, which, by the way, you've got MCL, obviously the full size oil futures. And you've also got, whoa, that light's bright. There we go. And you've also got the USO ETF, right? And you've also got the OIH and the XLE, right? So there's a lot to like. XLE is awesome. XOP is actually really good. They're overall quite supported. So keep an eye on that, whether that be day trading or swing trading. Swing for me is simply overnight on a 1 hour or a daily time frame. Those are still looking really, really good. And the sectors and the index that are likely to benefit the most from the bottom picking season, right? There's nothing to be scared of in October other than the candy and the cavities. Let me show you what it is that we're looking at for October from a seasonal perspective. And I've been doing a lot of SPY lately. Let's do a little QQQ. Let's do a little NASDAQ. If we take a look at the NASDAQ over the course of the last, and I'm just going to tighten this up to a 5-year seasonal, all right? The SPY has a far better looking uptrend through mid-October to late November, or even mid-November. It's a far better looking uptrend. The QQQ is a little bit more subdued. So keep in mind that September is actually the more scary of the 2 months, not so much October. October is going to feel a lot like August, which is why keeping that short-term day trading approach is going to continue to work. But if we're going to go bottom picking in that Q3 to Q4 transition, October's the time to do it, right? October is absolutely the time to focus on that type of bottom picking. Now, if we go ahead and take a look at something like XLK, number one weighted sector, looks a lot like it. What about Apple? Apple being the number one weighted stock in the number one weighted sector. So let's pull that one up here. There's Apple. Now, Apple could be a problem. However, if we take the 5-year seasonal out of the picture, we take the 5-year out of the just the tendency, and remember, we do have an iPhone 15 launch that's corresponding with this year. It'll be interesting to see, but be careful with Apple. This is actually, when I first looked at this a couple weeks back, I was actually surprised by this, but it just reminds me of something very important. Apple does not have to participate in the NASDAQ moving higher or even the XLK moving higher. So keep that in mind. Number two to Apple is Microsoft, right? And of course, gang, we're going into earnings season. So this is what Microsoft looks like. This is index sector stock from a seasonal perspective. Remember, seasonals are not setups. They're tendencies, and tendencies are not trades, gang. However, we know there's a certain rhythm. And by the way, we have been operating with this rhythm since June, or actually since July. June, I don't recall looking at the seasonal that much, so I won't speak on something that I wasn't tracking closely. But July, August, September, they are moving absolutely to the beat of these seasonals over the last 5 and 10 years. All right, so let's take a look at, so by the way, along the left-hand side, this is the margin that I keep the notes in. So anyone who's been in the futures room or the sector secrets mastery, or on the occasion that I am in the options room, you know that I keep notes. And these notes are designed to, number one, they're shared with the members when I'm in the room, so we can track what it is we're looking at, setups, targets, stop losses, notes. But probably the most important work that I do is the work that I do before I even start charts and coffee. And I think for a lot of traders, just because the bell rings at 9:30 doesn't mean that that's when we get to work. Again, let's go back to the ball game. What do they do during the pregame show? You see the athletes out on the field. They may not be all uniformed up, but they're out there warming up. They're out there passing, catching, moving around, warming up. And that's, to me, we're sort of athletes in that regard. We've got to warm up. When the bell rings at 9:30, we are ready to go. We are already ready to go 110%. For a lot of traders, they're sort of starting at 9:30. And you can tell those traders that start at 9:30 because their first trades come around 11, 11:30, afternoon. And that's fine too. But if you want to take advantage of the best hour of the day, there's an old saying, it's from the old floor trading days. And I remember back when the only S&P contract to be traded was the full-size S&P, and it was a floor traded contract. The old saying was, amateurs open the market, professionals close it. Who here's heard that saying? Amateurs open the market, professionals close it. Well, you might say, well, I'm a professional. I don't consider myself a professional because in trading parlance, that means something entirely different. You can be full-time, you can be part-time, but professional means something different in trading. Completely different, by the way. It means you pay exchange fees. It means you're under a completely different set of rules and regulations. That being said, do you want to go toe-to-toe with an amateur, or do you want to go toe-to-toe with the professionals? Respect the professional's opinion at the end of the day. That's what swing traders do. That's why the bulk of my swing trading is really made when I'm watching what the professionals think big money are doing. But when I'm day trading, when I'm going toe-to-toe, I want to go with the amateurs. Why not? Right? So keep that in mind. Amateurs open the market, professionals close it. That's why that first hour to two is such a great time to be day trading, or even short term, maybe like a 5, 15, 30-minute time frame. You're still going to have a great advantage in the morning. So be ready at the bell. Now, to be ready at the bell, there's just a certain number of things that it makes sense to do, right? So this is what charts and coffee is. This is my pre-market process. This is me warming up for the game. And if you take a look, what is my emphasis here? A 5-minute chart on the left and a daily chart on the right. And what that allows me to do is get a couple basic reads. I'll walk you through it right now so everyone can benefit. And of course, if you have any questions, feel free to type them in. We'll jump on in. But a couple of things. Have you checked out the economic calendar? What are the hot zones? And that would include earnings. Earnings is a type of hot zone, but hot zones are high volatility, high volume, scheduled. That's the most important thing. Scheduled events. What are things that we know are coming that can move around, usually a macroeconomic opinion? So inflation, jobs are at the top of the list. Anytime FOMC members are talking, they're at the top of the list. So make sure before the bell even rings, you know what hot zones were at 8:30, that are coming up at 9:45, that are coming up at 10. Maybe there's a 2 p.m. Eastern, right? Know those hot zones. The next thing is going to be simple things like sentiment levels. And again, gang, this is a very repeatable process. Hot zones, go to Forex Factory. For earnings, go to Estimize. These are free sites. All right. So I'm giving you the process right now. The next step is, what are my sentiment levels, right? One of the easiest things to do is look at, gang, listen to me now, believe me later, the previous session close. It's ridiculously easy and it's ridiculously high probability. In other words, as long as we're below the previous session close, there is a certain bearishness, right? When we're above it, there's a certain bullishness. When folks ask, Rog, how did we go through August and nearly double the account? I really tried to double the account in August. I wanted to make a point about difficult months still being tradable with singles and doubles. No home runs required. I don't think I even hit a home run, maybe a double or a triple in August. Can you just hit singles and doubles, be a boring day trader? So I wanted to sort of make a point in August, and I wanted to double an account. I think I fell short. I think it was 94%. Okay. So in September, I wanted to do it again. So I'll share with you all my trades viz for September, and we'll do the same thing. What was the win rate? When were the best weeks? How many trades did I put on? What ultimately was the return on the month? So I'll share that again, just as we did last month. But these are the ways that we go about finding singles and doubles. All right. So sentiment levels, the number one easiest. All right. Previous session close. All right. I really want folks to find some confidence. On Friday, I did a video called Confident Trading Starts Here. Could I have spent 5 minutes talking about fear mongering and how the markets are circling the drain and all those other things that you've heard all year long that have been categorically wrong? Absolutely. They grab attention. It's clickbait. That'd be really easy for me to do. But the bottom line is it has made sense to keep a little bit more of an optimistic view. And if you don't want to have overnight exposure, which I totally understand, shorten the time frame, right? Okay, so look at that previous session close. Another thing you'll see here is multi-trend. All right. Now I know my folks in the Sector Secrets Mastery, you all are very, very familiar with this. And those of you that just took the day trading class, which by the way is still available, you can actually you know exactly what I'm talking about. You can actually put this to work. And we know our pre-market reading is neutral. In fact, it's very, very early, but this is right now oversold at the low in a neutral environment. So there's some cool things happening as we are looking at an intraday market, but we are indeed below the previous session close. It's a little bit of a heaviness, right? Is this making sense? Is this helping, gang? You know, because I get so many emails every day. People tell me, Rog, I don't know what to do. My account is not where I want it to be. I don't have a process. I feel like I'm jumping from indicator to indicator. I feel like I'm jumping from strategy to strategy. And all I'm saying is shorten the time frame, right? Maybe you're a scalper. Maybe you want to be buying into rips. Maybe you want to be buying into dips, whatever it is. Start with simply shortening the time frame and doing some of this pre-market homework. The multi-trend is structure. Uptrend, downtrend, sideways, right? So if you can get that structure first, this structure here tells me to focus on a slow stow. It tells me to focus on buying into support, not being a bear, not being a bull, being mostly neutral with a bit of a bearish overhang because of being below the previous session close. Think about immediately how much of an advantage I have on folks who are just starting the day waiting for some indicator to tell them what to do. I already know which direction I want to move, right? Always make direction the first thing. All right, so then we go into this here, and I know that might be some techno babble that some folks aren't familiar with, the LSG clearing range. This is, again, really old school. If the previous session close is old school, clearing ranges and initial balance is really old school as well. And what it is the phenomena of time. Time is a huge aspect of day trading. If I'm looking at time here, gang, right, I know to look at the first 5 minutes, 50 minutes, first 30 minutes of the morning during that clearing period. The edge that you can get by looking at certain chunks of time and the ranges that they create, and we've automated these things. That's what LSG is, right? So I look at 9:30 to 9:35. I'll look at 9:30 to 9:45. I'll look at 9:30 to 10. Lots of decisions are being made during the first 30 minutes. The reason it's called the clearing period or the clearing range is trades are being cleared, right? Pending trades, overnight trades. This is a phenomenon that will always affect any market with an abrupt close and an abrupt open. Keep that in mind. These are things that will always work. These are things that I've been doing and using for darn near 30 years, right? So start off with that solid process and you'll find yourself finding more opportunities when you see the bell ring. Okay. You won't be sort of, dancing backwards in high heels, so to speak. I can't walk in high heels. But, I don't want anyone feeling like, oh, the market's coming at me. It shouldn't be. You'll be able to be the aggressor. You'll have that directional bias when you do a little bit of homework right before the bell rings. Okay, so Robert has a question on XLE. Yeah, Robert, great question. And yeah, that's my favorite corner. We started off the show with a little bit of crude oil and XLE. I'm with you 100% there. Yeah, absolutely. Peter says, hey there, Peter, good morning. End of quarter is less stressful because what I've learned from you. Peter, I was figuring we might have a really tricky Monday, but we ended up going, 2 for 2, grabbed a little bit of QQQ, grabbed a little bit of Johnson & Johnson. I missed the Russell, but yeah, it's off to a good start. I appreciate that, Peter. You're putting in the hard work, right? What I'm doing here is laying forth a process. Everything that I just showed you can be done for free. Nothing here is going to require anything but a little bit of work before the market begins. That's what we do in the Sector Secrets Master Room every morning. All right. So you can put these to work right away, gang. I really want to make sure you have some process that's going to help you go forward. That is why we're here. Yes. All right. Next up, Penelope asks, do I set stop limits? I do not. Penelope, I like stop orders, which is a market order with a price trigger. And I like limit orders, which is a price conditional order, limiting the fill that I will accept, right? That's what it is, a limit on the fill. But I do not like stop limits. No. If I choose a 25% stop, sometimes I get stopped out too fast because I didn't get the best fill. It's frustrating when I'm right, but I get stopped out too soon. I totally hear you, Penelope. So the way that I've worked around this is something that is a staple in our room is we place alerts. Now, if you want to place a stop limit for that reason, I totally get it. And I love the way you're thinking, right? To get that control of your order flow. Awesome. That's a rare thing. So awesome. But what I would say is in the case of an extreme emergency, right? Pull here in case of fire, that stop order has got to get me out. And if I have a limit associated with the stop, it's not going to do its thing. It's not going to do its airbag thing. That's what I need. So for me, that stop order is meant to take me out, not even be that fussy about the price, just get me out of harm's way. And that's why I don't like the price contingency of that limit associated with the stop. I totally get where you're coming from. But like I said, in case of emergency, I need that stop to do its thing. I need those airbags to go off. So place an alert, Penelope, in the vicinity of your stop. So you got a heads up by way of your platform telling you, hey, time to pay attention. And then you can choose to place your stop or not. That's the way I do it. So I hope that makes sense. Use your platform. Use your platform. That's something we talked about in the class, which, by the way, you can still join. It's at simplertrading.com/clarity. The reason I bring it up, gang, is because once that class offer is over, the inclusion of the hourly price movement range subscription, which is a bonkers offer, which is included with the elite for the year, the class is including that, well, depending on which one you get, basic or elite. Just want to make sure if anyone's interested in HPMRs, this is the time to re-up them. I'd hate for you to miss out on the deal of that. All right, that's the only reason at this point I'm mentioning it. All right, so can we take a look at VLO and MPC? Munir, yeah, great corner of the market to look at. VLO, MPC have a little bit of a foot in the XLE and a little bit of the foot in the XOP. Both places I absolutely love. And at this moment, these are actually outperforming the sector. So index sector stock, these stocks are outperformers within the sector. So these are awesome. Now, this next thing to keep an eye on, Munir, unless you're looking at shares, in which case these are plenty liquid, keep an eye on the option liquidity, right? Because sometimes some of these stocks at the strikes that we want may not be as liquid as we desire. But yeah, gorgeous, gorgeous looking names. Absolutely. And in a corner of the market that's absolutely doing its own thing, strong, powered by the commodity, meaning crude oil. And yes, two great outperforming names. All right, can we take a look at the SPY and QQQ? Now remember, the SPY and QQQ is a 930 to 4 world that reflects ES and NQ. So SPY, QQQ for me are oftentimes the ETF alternative to what we would do in the futures. But I'll tell you, I would mostly tell you to focus on NQ and ES, right, at this time, and then after 935, SPY and QQQ. But right now, both are neutral, both are oversold. And what I'll do in the first 5 minutes is start to determine which sectors, which stocks might lead one to be more well-structured, maybe bullish, more bearish than the other. Okay, gang? So as always, thank you so much for being a part of Charts and Coffee. Please put this pre-market process to work. Check out the replay. This is just a little bit of a taste of the process. We'll touch on it again later on. Maybe tomorrow we'll touch base on it again. Do the work, even 10 or 15. Again, this takes maybe 10 or 15 minutes, okay? And if this kind of stuff is resonating with you, come check out what we're doing over at the Sector Secrets room, sectorsecrets.com. I'll see you tomorrow, same time, same station.